Savings bonds, the underdog of the financial investment market, are back on the scene, offering 7% interest. Yes, you heard that right, 7.12% interest to be exact. While that's as high as it comes, it's not without uncertainty. Marshall Clay, senior advisor at the Welch Group, puts this in perspective.
Investors are looking for a way to not only preserve their capital, but probably more importantly in this environment, protect against inflation. And so when you're looking around at all the different investment products out there, certainly Series I bonds are something that you can look at.
Now for the fine print. I bonds, or inflation bonds, are sold by the U.S. Treasury. The 7% interest is only guaranteed through April. Here's how it works. I bonds have two different rates. The fixed rate is locked in through the life of the bond. Unfortunately, it's been zero since May 2020. The variable rate is based on inflation and resets every 6 months. Those two rates are combined to create the composite rate. In this case, the variable interest is 7%. Those who purchase now will lock in a zero fixed rate, leaving their investment to rise and fall with inflation.
Even though you may be getting an above market rate, for people that have a lot of money out there, it's not really going to move the needle all that much.
Investors can purchase anywhere from $25,000 to $10,000 worth of I bonds. Marshall says this isn't for someone who needs quick access to their money.
You have to hold the bond for at least a year. So it's not as liquid as maybe some other bonds that are out there. And if you sell within a 5-year period of time, you lose the previous 3 months of interest. So there's a little bit of a penalty if you sell before 5 years. So they're giving you this decent rate, but there's some restrictions on liquidity.
As for the long game, who can benefit? Especially if the fixed rate increases in the near future.
If you feel like we're going to continue to experience high levels of inflation over the foreseeable future, purchasing a $2,000 or $5,000 bond for, a grandchild or something like that may actually be a pretty good investment long term, because you can hold those things for 30 years. And so even a small investment, if inflation continues to run relatively hot, can be fairly lucrative to somebody.
Those who purchased I bonds when the fixed rate was higher could be earning around 10% interest. You can read how to purchase these bonds right now on the WBRC News app. Jennifer Horton, WBRC, Fox 6 News, on your side.